Hey everybody, this is Dan back with another video, and I'm super excited because today we'll be talking about the top 9 things you absolutely should not do when purchasing a home. Number 1, don't overextend yourself financially. You want to have a good understanding of your finances as you're going into the home purchase process. Know what the mortgage payment is going to be anticipated to be around, including property taxes and homeowners insurance, and be aware for those unexpected costs for maintenance and things like that that you may not have been used to previously. Number 2, don't skip the pre-approval. There's a lot of clients that'll go out and look for homes without having gotten pre-approved, to know what the house payment might be around, to know if they can even qualify for the house payment. So before you go out and fall in love with a property, do a little bit of homework, talk with the lender, get pre-approved first. There's no cost to doing it, and then you're going to be all set so that once you find the right house, you're going to be all ready to go. Number 3, don't ignore the additional costs. Get a quote before you're purchasing a house so that you understand you may not just have to come up with a down payment. There may be closing costs as well. They're due at closing for things like homeowners insurance, the appraisal, title fees, escrows. So get a loan estimate, talk with the lender, get a quote, run through so that you have everything all ready to go for closing. And then again, after closing, be aware that some of those things can change. Your property taxes and homeowners insurance could fluctuate. If your property has an HOA, there may be dues that you have to pay. And of course, be expected for maintenance. Hopefully you can avoid it, but at some point you're going to have to maintain that property, and that will be an additional expense. Number 4, don't forget to pay your bills on time. Hopefully we'll all have things set up and it's a habit that we're paying our bills on time, but lenders do have credit monitoring in place after they pull a credit report. So anything that happens after that credit report is pulled can still have an impact on your approval. Late payments will get reported, the lenders will get notified, and that could cause that lender to be required to pull a new credit report. So just keep an eye on your current accounts, make your payments so that you know you're not going to have any issues. Number 5, don't wire any funds before taking the proper precautions. Wiring funds can be very safe, but after you obtain those wiring instructions, you're going to want to take the additional step to search the title company, whoever you're going to be sending or wiring those funds to. Don't call a phone number from an email address. After you get those instructions, know who it is, talk with your loan officer, and contact that title company via a third-party listing like on Google. Call that number directly so that you know it's the main line. Have somebody verbally confirm those wiring instructions to you over the phone. Once you do that, you know that it's super safe to wire your funds. You don't just want to take wiring instructions that you received by an email without verifying directly to make sure you're talking with somebody at that company, that those are the correct instructions and that you didn't get sent instructions that were not correct. Number 6, don't deposit any funds into your bank account unexpectedly without first consulting your lender. When we go through the process of the loan, we have to get the most recent 2 months of statements to source funds that are used for the home purchase. And the underwriters will look for deposits in those bank statements. If there's any deposits that aren't clearly from employment or somewhere else that's easily documented, we have to source where those funds are coming from. And unlike the real world where cash is king, that's not the case in a mortgage. Cash deposits are typically not able to be used unless we can create a paper trail specific to where those funds came from. And sometimes you're allowed to use things like gift money from friends or family to purchase the house. But even so, we want to make sure that we're documenting it the right way with sourcing those funds. So before you make any large deposits, talk with your lender and discuss the best way to go about that. Number 7, don't change jobs right before closing. Even though you'll have submitted pay stubs and maybe done an employment verification at the beginning part of the application, that doesn't clear us through the closing date. And typically within the last week before closing, even after everything's already been approved and verified with employment, lenders have to reach back out to the employer where we initially verified the income from and just do what's called a verbal employment verification. The main purpose of that is to make sure that you are still employed at the same job that we initially verified. And if that call is made right before closing, even after you're clear to close, that could put a halt to the loan process. So if you plan to make any changes, please wait until either after closing, talk with your loan officer about it, because there's always that final step that has to be verified. Rule number 8, don't make any large purchases or open up any new credit accounts before closing on your home. It can be exciting to purchase a new home and you maybe want to get some furniture or some equipment, lawnmower, whatever it might be, to have ready for when you purchase and close on that new home. But again, that credit monitoring comes into place, and lenders will get notified if your credit report is pulled. We will then have to ask you about that credit pull. And if there was a new account that you opened, we have to add that into your liabilities for qualifying. And it's just better not to risk that. And if you absolutely have to open a new account for any reason before closing, discuss it with your lender first so that we're aware of it and we can plug that in there and make sure that that's not going to impact qualifying. The worst thing that can happen is to do that unexpectedly, and then you have everybody scrambling to just make sure that we're adding it in there and that everything is still good. And finally, rule number 9, don't ignore the experts. We are here to help our clients. And those of us in the business, and there's lots of us that really do care about our clients and making sure that we're giving you the best advice as we would for our friends and family. We're here to help you. You're going to, of course, want to work with somebody that you feel comfortable with and feel like they're working within your best interest as well. But it's so invaluable to have somebody that has knowledge of the markets and a history of working in this industry to give you the best advice and answer questions, and of course, ask lots of questions. That's what we're here for. I always like to go through with my clients as much as possible, and it's hard for me to know sometimes if I'm giving too much information to clients at a certain time. So I'm always happy to answer questions. People in our industry are always happy to help give you our opinions. So use us for what we do best. And if you have questions, ask us anything. Thank you all so much for watching. I really enjoyed this. This was a little different, but it was fun. If you think that I missed anything, or if you have anything that you would like to add, or if you have any questions, please leave a comment down below in the video. Feel free to reach out to me here anytime. And I really enjoy doing these myself, so I'm going to keep putting this stuff out there for you guys. Thank you all again for stopping by. Please like and subscribe. Hope you have a great day, and I'll talk with you again soon.